Hi traders, this is Chris from Elite Currency with a new update and video on the euro dollar and pound dollar. As mentioned last week, we have a special offer with XM Broker in October, the month of October. Click on the link in the description box below to find out more information about that. Alright, so last week on the euro dollar, this is the daily chart. We did get that continuation to the downside. Price broke below 114.30, then dashed down to 113.50 and is now retesting the previous bottom here at 113. So if it breaks below this 113, we're in a full-fledged downtrend, I think, and we should expect continuation down to maybe 110. But I think for the moment, this is more of a bouncing spot to me still. It looks like price finished a bullish ABC right here, and for the moment, it looks more like a bearish ABC to me, which means that we're going to get a complex expanded correction. For those that like Elliott wave patterns, you'll recognize maybe a WXY. For those that don't like Elliott wave patterns, basically I'm expecting a three-wave up, again ABC. So that basically a continuation of these ABC patterns, and now I expect a bullish ABC pattern. So how do we know which one we get? So taking a look basically at this chart, I think we're waiting for a break above the 21 EMA for a bullish ABC pattern, or a break with a weekly or daily candle below 113 for a bearish break. All right, that's the main kind of criteria I'm looking for. But we already see a bullish candle here, in fact, on Friday. So that could already indicate a reversal. That could already be kind of a first indication that we're getting the start of that bullish ABC. And that bullish ABC could go quite far if we put a fib from this very top to this very bottom, right? Because that's the 5-wave pattern. You can see that pretty clearly, like this, 1, 2, 3, 4, 5. So we're getting a 3-wave correction here, this being 1, 2, and 3. You can see it could go up to the 50 fib, 119.30, or even the 61.8 fib at around 120.78. All right, so those are the targets for an upside. If it goes to the downside, let's leave that same fib on the chart on this time frame, and let's move it a little bit lower. You can see the minus 272 target is at 109.60, also close to that 110 round level. All right, so those are the main things to keep an eye on. Let's take a look at that 4-hour chart. For me, this is looking like an ABC. This was strong momentum, pullback for wave B, and this is looking like a wave C. There is divergence between these, basically these bottoms, right? Lower low on price, but a higher low on the oscillator. So that is indicating weakness. That is therefore not looking like a wave 3, but more like a wave C because of that divergence. Divergence would not appear if it is a wave 3 typically. All right, so odds are more in favor of an upside, in my view at least, unless it breaks below 113. Now, it could still push lower. It could still retest 113, make a lower low, maybe go down to 113.25. That's possible. But if you look at the hourly chart, it does look like a 5-wave pattern is finished here, I think. And there could be here, for instance, 1, 2, 3, 4, 5. We have a pretty strong bullish momentum here as well. So I think that a key thing to keep an eye on the hourly chart is if price makes a dip here, makes a retracement, will it bounce roughly the 21 EMA zone? Will it bounce, for instance, on this left shoulder level right here? Left shoulder, head, right shoulder. Maybe there's a head and shoulders pattern, possible even deeper around here. So anywhere around 113.50 and 113.78 could be a bouncing spot. So if price does move down, and we see a bounce here, that would indicate, in my view, a likely turnaround, the likely reversal for that start of the ABC pattern. Price already broke above this resistance trend line, so that could be a hook back or pullback for more upside. Of course, for a bigger upside, price would need to break above this resistance trend line here, or this resistance zone. Let's put both trend lines on the chart like this. There we go. And obviously price would need to break above that. So we could have a pullback, a bounce, a move up into this zone. There could be a new kind of correction. The price will have to break above that zone for a bigger upside, within that bigger ABC. So all of that could be, for instance, wave 1, 2, 3, 4, 5 for the A. Then price goes down for wave B, and then again up for wave C. Something like that could easily occur, in my view. So those are the main things. Otherwise, a bearish break I would only consider with a strong daily candle breaking below that. And we'll re-evaluate the charts on Tuesday and see if that happened by any chance on Monday. Doesn't seem likely to me, but if it does, of course, we'll analyze that on Tuesday. All right, regarding the pound dollar, it is more bearish. pound is looking like a downtrend and looking like a break to the downside. First of all, there is strong momentum here. Then we get a pullback and a continuation, and you clearly see the break of this support trend line as well, like this, right? Now we're seeing a new break of this smaller consolidation zone here, and we're breaking through the fractal, the ECS fractal, and the ECS fractal is indicating downtrend. Moving averages are aligned. Strong bearish candle last week with the close near the low, all indicating that the bears are in control. So definitely weekly chart, no doubt, is bearish. We can use the last week's high as a measuring point because price should typically not break above that. And we already were bearish in the last week because of the wicks here on the weekly chart. 1, 2, 3, 4 wicks. So not surprising that pound made the break to the downside. All right, daily chart also broke below these fractals, key fractals, ECS fractals broke below the support trend line, and we've been in a break so far. So there are two scenarios possible here. This is an ABC or a wave 1, 2, 3. Now it's 50-50, leading maybe towards a bit more towards a bearish breakout at this point. So that's opposite of the euro dollar. Euro dollar is looking more bullish to me. Pound dollar is looking a bit more bearish, but ultimately they could move in the same direction, right? Euro dollar could fail and break to the downside, or pound dollar might move up with the euro dollar, and this turns out to be an ABC to the downside rather than the 1, 2, 3. So how do we know which one is which? Well, from my point of view, let's put a fib from here to here. There we go. And you can see that price is only at the -272 target. So for this to be a wave 3, it would definitely need to break below the -61.8 target, which is the previous bottom as well. Then this is looking like a wave 3. Otherwise, this could all be part of a wave C. Now that wave C could extend further down to the -61.8 target rather than the -272 target, even if it's a wave C rather than a wave 3. So as long as it stays in this channel, there is space for more downside, I would say, right? If it breaks above this channel and the 21 EMA, then a bullish correction might be taking place. So let's take a look at the 1 hour chart now. There we go. So if we get a push up like this, if we get a head and shoulders pattern like that, it is still bearish in my view. This 129.25 zone, where we have a trend line, a long-term moving average, the kind of consolidation zone right here, bottoms in here, all of that could still be resistance. All of this could just be a simple ABC correction, and down it goes again. And of course, this upside doesn't even have to happen. If price goes sideways long enough, then it is looking like a bear flag, and it could break immediately and move down to the next target, which is around 126.90. All right, 127.50 might be a level to think about too, which be careful about because of the quarter level. So 127.50 down to 127 is the likely target. Okay, so either flag, or if we get a zigzag correction, watch out for the bounce here. If it does break above 129.25, then obviously something else is going on, and there might be a bigger correction to the upside. All right, but otherwise, clearly lower lows, lower highs. So if price moves sideways like this, it is more set up for a downtrend continuation. And then we'll have to see on the daily chart how price responds to the 127 level. Is there a bullish kind of response to that level, or is there going to be a breakout? That's going to be key in my view for that answer, if this is long-term still a correction or a downtrend. All right, that's it for now. Check out elitecurrency.com for more free analysis, of course, and material like our fib and wave guide, for instance, which you can find in our articles and educational section. Wish you all great trading, and talk to you soon. Cheers.